Today, we're going to be talking about Canadian investors sitting on the sidelines right now looking for alternative options. They're looking for potential investment down in the US, but the problem is majority of investors don't know how to invest cross-border to mitigate taxes and to be able to find these deals and to be able to operate them efficiently. Today, John and I, we're going to be breaking down a very streamlined process to be able to purchase these properties and how we're rolling out our deals to be able to be the complete easy button when it comes down to investing in the US. John, it's great to be here with you.
Great to be here, Mark. This was really the inspiration to start Faris Capital Partners to help Canadians get access to these incredible deals south of the border, right? As a personal investor, I know you were running into challenges finding those cash flowing real estate deals. And so, when I look at, Canada, for example, it's so interesting, but, the Canadian Pension Fund actually increased their allocation in the U.S. investment from 44% to 50% in 2025. So, I know there's some turmoil and some things happening in the US that maybe some Canadians don't like, but I'd encourage Canadians to kind of separate the politics because at the end of the day, politicians come and go, right? But what doesn't come and go are the fundamentals of wealth creation. And at the end of the day, investing in multifamily real estate is one of the best ways to create wealth. And just due to some things that happen in the US, the more landlord friendly approach, and just some of the other factors, US real estate investing is particularly attractive. So excited to dive in today.
For sure. And John, what's really interesting, so there's a lot of talk with tariffs back and forth. And, the way that I see this is when I was growing up with my brothers, I have five brothers, three sisters and five brothers. And I fought quite a bit with my brothers growing up. And, it was interesting. We fought, but like the end of the day, we worked it out. And
Yeah.
so and we're like best of buddies now. And
Yeah.
so it's interesting with the US and Canada. I think it's very relatable that, there's like big brother and, little brother. We'll call Canada little brother in this case because US is 10 times bigger. But the point there is that there's a very long history of working together.
Yeah.
And right now it's just there's a back and forth on this. And so what's really interesting is that Canada and the US, they will work it out. And so that's where in my opinion what I've seen through the years is that what's really good for Canada can be actually really good for the US as well. And so as this blows through, the principles for investing down in the US are as strong as they'll ever be. And so being able to invest through this, I think, is going to be looked back as one of the greatest opportunities that we have today because there's a lot of people that are sitting on the sidelines and they're just waiting. But John, you and I both know the deals that we're finding right now, because of the uncertainty to a large extent, is exactly why Canadians should still be investing down there, in my opinion.
Yeah, it's like Warren Buffett said, when everybody's scared, get greedy, and when everybody's greedy, get scared, right? And I think this is a time where because of some of what's happening, we're seeing deals trading 20 to 30% below peak market values. But the fundamentals of this multifamily space are so strong. In fact, we're seeing increased renewals, right? So renewals just jumped from on average 55% to 60% in the past 12 months, meaning people are staying in the apartments longer. They're accepting rent increases because they like where they're at, and maybe they see that there is a lack of inventory. So better stay where I'm at than maybe go down the street and maybe pay substantially more for that new unit. So we're seeing cap rates that are really advantageous for purchasing today. In other words, we're buying at a higher cap rate than we project that we'll be able to sell at. So that's a great place to be as an investor. So it's in these times of uncertainty when often the best deals can be made, right? So, absolutely.
For sure. And what's really interesting, John, is that we have a brokerage north of Toronto, and I still really believe that buying a single family, your principal residence, there's a very strong case still in Canada to buy your home. Like I try and tell everybody should be their number one focus is to buy their principal residence. And so I think for all the residents that are there, it's like buy there for sure. And so, but the question is if you have an extra dollar, because the reason for that, there's just the lack of building that's happened. You still have population growth. Costs are not going down to build homes. So if you own a single family, there's a strong case it's still going to do well. But if you have that extra dollar, that's the question that we're talking about here. Where's the good place to be able to invest in a property, which, John, this is like really big for me, is that appreciation is a very good thing. But for me, I want to invest in a place that will provide cash flow. So we'll pay for all the expenses, the amount that I can get in rental income from a resident, and pay off everything on a monthly basis. So it pays my mortgage, it pays the insurance, taxes, and the property manager, and it has money left over I can put in my pocket. And that's where it became very hard to find these deals. You used to be able to do this 5, 10 years ago, and it became harder and harder to find these deals. And so that's where the extra dollar became like, where can I go? If I can go anywhere right across North America, where would be the best spot to find cash flowing properties that have the largest upside? And that's where I arrived at this thesis that for extra dollars, especially if you're investing in apartment buildings, you want to be able to invest in areas that have no rent control, that are landlord friendly, that are growing, and is still affordable, where once you buy the property, it's actually putting money in your pocket at the end of the day.
That's right. Yeah, 100%. I mean, up in Canada, right, you're seeing lower cap rate deals, limited supply, the rent restrictions you mentioned there. It's interesting here in the US, Mark. I don't know if you saw, but there's actually now some class action lawsuits being filed against the federal government for the rent restrictions that were imposed during the pandemic, because basically some municipalities just let people not pay their rent. And at the end of the day, what happened? People took advantage of it. They could pay their rent, they just chose not to. And it put a lot of operators in a bad position. And so, there's just more opportunity in the US, I think, to find good quality deals without a lot of the regulations and restrictions that unfortunately a lot of Canadian provinces do subject multifamily operators to.
Well, and that's where, I'm proud I'm a Canadian, but at the end of the day, I'm agnostic when it comes to my dollars and our investor dollars, as to where do I think has the largest upside, and where do I want to bet, or where are the numbers telling me. So if John, once we do our analysis, it could be in France.
Yeah,
Makes sense. And so it's not only the ability to find the deals, but it's the ability to build the team, to be able to execute on that from start to finish. And so this is where it's like I'm really agnostic to the area, and it's just this is where we landed down in the southeast of the U.S. That not only the ability to find them, but the ability to build the team and then to execute as well, I think is really, really important. The other side is that why Canadians are actually looking to get some diversification is because a lot of our investors, John, as you know, they're heavily, heavily investing in the Canadian dollar. And so if for whatever reason something happens in Canada, having some diversification into US dollars as the world's reserve currency is a very smart thing to do. I mean, right now we have the Canada's pension fund. So this is a massive pension. It's like over $500 billion. They have over 50% of their assets in the United States right now. And so the reality is that there's a lot of Canadian money that is invested down in the US, but for the majority of investors, they just don't know how to be able to get into it. And so that's where Faris Capital Partners, like as you mentioned, was really born, coming from, listen, I couldn't find a good option myself, but not only do I want to be able to take advantage of it, I want to make sure that the execution is flawless. And I want to make sure that as an investor, I'm getting in at ground level. It's not like a REIT where you cap out at a certain amount. Like I want to be able to participate and come in as an actual partner. And that's where, John, we've structured this to be such a strong offering that you and I both are investing personal dollars into this because we believe in it so much.
that's right. You mentioned that kind of agnostic to where you invest your money, right? Where the opportunity is. Well, I work with a fantastic financial planner, and a few months ago, she said, "Look, we need to increase your allocation to the global market, right?" And you've seen the European markets are up like 15%. So it's not about look. I'm in the US. I love the US. I may not be happy with everything our government's doing today, but at the end of the day, like if there's opportunity to make money in Europe, I'm going to take that
Yeah.
opportunity, right? I'm
Why
not
not?
going to sit around and, go, well, I'm US based. I only invest in US companies. And so, this is that same thought process, right? You have your growth, you have your income, you have your global. When you're looking at your public stock, like a good financial planner is going to recommend diversification there, some bonds, some income producing, right? Your high growth and all that, and then adding real estate into the mix is another way to do that. And I think we've kind of, I guess, beat a dead horse in a sense, but the U.S. is the greatest and the best place to do that, to diversify into particularly multifamily real estate.
Yeah, for sure. So there are really three main things that challenges come up when Canadian investors invest down in the US. So there's the double taxation potential issue. We'll talk a little bit about that. The cross-border filings, the tax filings, and then the currency risk as well. So these are three potential things that come up. And so many just like go and they start taking action without getting wise counsel. And so this is where with the double taxation, I spent about a year with a cross-border expert. This was not the average accountant. This was a cross-border accounting expert that looks after high net worth investors. And so has a lot of experience in this. And we created a structure an investor could easily invest into on the Canadian side where they didn't need to worry about we'll say double taxation. So pretty much what the structure is our Canadian investors invest into a Canadian limited partnership. And then those proportionate shares flow down to a Delaware limited partnership that actually owns the property. Now, our American investors come in at the Delaware limited partnership level. And so US investors get all the benefits, the tax benefits, investing as a US citizen. And Canadians, they will pay very similar to what they would as investing in any other Canadian deal. They're actually investing into a Canadian limited partnership. And so the structure is very, very efficient. They're not getting double taxed, and they don't need to file cross-border taxes. And so this is something, John, I was at an event one time and I was speaking with this investor. He had invested with another Canadian operator that was actually buying property down in the US. And so he was Canadian and he was actually in on the deal, but the operator had said that you actually have to go in on the US side and invest on that end. And there wasn't any sort of cross-border structure. And so he was a doctor, really smart guy. He said, Mark, as a Canadian investing down the US, filing all the taxes, he said, the words he said were, it is the bane of my existence
Yeah.
to be able to manage it and to be able to stay on top of it and the nickeling, diming, and the time that it took him. And so that's where it was really important as we were building this. It was like, we have to be the easy button of investing down in Canada, down in the US, because I couldn't find anything. And so we needed to be extremely easy because, as you know, John, we have over 200 investors now. They are extremely busy people. They're
Mm-hmm.
entrepreneurs, doctors, lawyers, like super successful, and they don't have time to be able to, go and spend all this extra time with tax filings and, learning all the tax code. And so we've taken that completely off the table. And
Mm-hmm.
then the other side of it is the currency. Like that does come up sometimes, like, well, what about the currency risk back and forth? And this is where for us, we want to make sure that we minimize the actual conversion rate. So we do have a really good connection partner that actually helps lower the conversion rate. So they're not taking exorbitant fees on that side of it. But what's really interesting is that the Canadian investors, they actually invest in US dollars. And majority of the goal of the investors that are coming in is they'd like to continue to build a nest egg down in the US. And that way they're, regardless of whatever the conversion rate is, here now. And because these deals that we're investing in are such a high return, that over the long period of time, they're looking to keep their investments in US dollars down the road moving forward. So we do minimize that as much as possible. But at the end of the day, they're looking to build their wealth down there. So they're not looking to convert back and forth. So by doing that, it actually lowers down a lot of the risk by investing long term and keeping those dollars in the US.
That's right. To your point, we spend a lot of time putting this structure together. And, the benefit to our investors is, we eliminate that concern. But really, yes, you might want to get with your accountant and verify these things, but
For
you don't
sure.
need to go hire your own tax attorney or tax accountant. We've done all that hard work for you. But I'm thinking about that doctor you mentioned there and just finding out after investing that he's got IRS tax withholding in the US and in Canada. Gosh, that's going to eat up a lot of his potential profit, on that deal, right? And just taxes. So, being sure if you're a Canadian thinking about investing in the US, if you invest with us, you're taken care of. But if you're looking at other operators, ask a lot of questions. And if any say you need to invest on the USLP side, that's a walk away moment.
Yeah. Yeah, for sure. And John, with my account, he said, Mark, I get calls pretty much every week from investors that had already purchased a property and they purchased it in the wrong entity. And so then he has to tell them, well, you're going to get taxed twice. And so, say if you're getting taxed let's just say at a capital gains, you're at a 25% net area, you could get up to 50, 60, even 70, he said, at some cases, percent tax if you're not careful. And so before you buy anything in the US, speak to a cross-border accountant and just verify that the structure that you're buying it in, whether it's personally, whether it's through an LLC, whether it's through your holdco, is the right structure. Because again, it can be a huge headache to unravel it. And then, the tax basis on that as well. I mean, there's exposure there if you don't slow down.
Yeah, that's right. It goes back to investors need to be doing their own due diligence, right? Into the operator and into the deal. So don't be afraid to ask those questions. So if you're looking at a US operator, right, do they have that Canadian specific structure and tax support we've already discussed? Is there monthly reporting and on time tax slips? That's something that's super important to us. We have a communication guarantee on the 30th of every month, 28th of February. We send out a detailed monthly report, and then we do quarterly reports along the way as well. Ask, can you speak to other Canadian investors that have invested? Check those references, make sure their experience matches up with what you're being told. What is their system for handling those wire transfers? And does money come back in US dollar or Canadian dollar? And, just good general sense, right? Almost regardless of the Canadian US side, but are these returns real? What are they based on? Is this aggressive underwriting? So, as an investor, it's imperative that you take time to do your due diligence on the deal and the operator itself.
For sure. So a couple of other thoughts here as well is that, a lot of times investors, I'm speaking with them and they'll say, hey, listen, can I get my accountant on the phone with you so that you can explain the tax structure? I said, no problem. And I've done this before. And so the accountant jumps on and I say, okay, here's the structure. The investors are coming into a Canadian limited partnership, and we're going to issue a T5013 tax slip, Canadian tax slip at the end of the year. And as soon as I tell them that, the accountant's like, oh, thank God. Whoa. Oh,
These
that's
guys know
great.
what they're
Oh,
doing.
right. Oh, great. And it's like they cut me off immediately. They're like, oh, great. Okay. That's wonderful. And they're like, it's the end of it. And so this is like that we have the structure and that we do all the cross-border reporting. This is a massive, massive win because majority of the operators will not do that. First, it's very rare to invest with the Canadian operator. Canadian, and I know you're on the US side, but
Yep.
as a Canadian, to be able to invest and then to be able to have the tax structure so that you don't need to do the cross-border taxes. And so, this is like really, really important. Now, the other side of this, John, is how we structure the returns as well, like the cash distributions that we return to our investors. It's not only very, we'll say, efficient from a cross-border standpoint, so it's very little time, if not, there's no time there once you come into the deal. But once we do that, the return, the distributions in that kind of 5 to 6% distributions that come from cash flow, that's return of capital. So that means that at the end of the tax year, you're not paying tax on that. You're mitigating tax until we sell the building in 3 to 5 years down the road. And then it's a capital gain at that point. And so there's a little recapture and then there's capital gain. And so this actually mitigates tax completely right until you close on it in 3 to 5 years down the road. So not only is it very little time, is very efficient from a tax perspective as well at the end of the day.
That's right. So, why should a Canadian be considering investing in the US today? Well, a couple of things. So, interest rates have risen over the last few years, but in the United States, they're stabilizing. So, strong buying opportunities are being created. We mentioned the pension fund, but there's kind of a theme in Canada. A lot of Canadians are allocating a large percentage of their investment dollars into US based companies, and they're pulling out of the more traditional kind of markets like mutual funds and REITs. We've touched on REITs on other podcasts, and a lot of people don't realize, with a REIT, you're really kind of investing in a more stable cash flow in a sense. You're not necessarily participating in the upside of the deals that REIT is doing, right? You're just getting this cash flow that they promise. Where investing with us, if we hit a grand slam, you're getting your allocation of that. 70% of our profits go to our investors after we reach that 8% preferred return. We do have another hurdle at 15 IRR where it goes to 50-50, but the majority of those profits are going to our investors. And with that right structure, and number one, we only buy deals that cash flow on day one. You're getting monthly cash flow in addition to that long-term appreciation and the forced appreciation that we accomplish through our value add strategy. So, it's not just about investing across the border. It's about investing in an area you can really be confident in, because you're not going to be limited by some of those regulations that, look, there are states in the United States, to be very clear, we don't invest in Canada or New Jersey or New York. They have very strong rent controls in place, and they are more tenant or resident friendly. And I mentioned this before, Mark, but I hear landlord friendly. It almost seems like that's like tenant, like reverse to the tenants, but it's really not. What it means is that an operator can operate their building. And, in my experience, the free market works best when, there needs to be regulations, right? Building materials, how residents are treated, what's the process if somebody doesn't pay their rent. It needs to be there. But if it's so one-sided to the resident that it actually disincentivizes owners and operators and developers from coming into that space. And we're seeing that in California, where they have the biggest housing shortage than many other states in the United States because of these restrictions. So, it's just a great opportunity to diversify for all the reasons we mentioned, diversifying into the US dollar, getting strong monthly cash flow, and just as a general sentiment, right? Like, you should not have all your investments in the public markets. We've talked about this, Mark, right? But somebody sends out a tweet and the stock price can go down 10%, right? And it's like, I like investing in things that aren't subjected to the whims of a person's opinion or a news article, right? At the end of the day, people always need a place to lay their head down at the end of the night. And with our extreme focus on the residents, we always overperform. And on every deal we've done, we're outperforming our projections because of that strong resident focus. So, if you're interested in learning more, go to fulloutinvesting.com. We have a wonderful presentation on there. It's about 50 minutes long. You can watch it at 1.5 speed if you'd like, but it just walks you through not only investing and what these deals look like and what the structures are and all the considerations you need to be thinking about, but also talks specifically about our approach. We have a sample deal on there, and you can book a time to talk so you can learn more about our strategies to help Canadians extreme massive wealth or create massive wealth in the United States.
Amazing, John. Well, thanks everybody for listening. If you want to learn more, go to Full Investing, as John had mentioned there. We love and believe in you guys. Keep dreaming and investing big.